Hello YouTube. The question we're going to be answering today is, if the slow bleed on Bitcoin continues, where am I looking to long next? Also, is the low in? So let's jump into the Bitcoin charts and go through some zero bullshit TA. Is what you guys are here for. Remember, nothing discussed today is financial advice. I'm not a financial advisor. It's all for educational purposes only. Now, following on from last week's video would have been Thursday, would have been about here. Since then, we've had another move to the downside, roughly around 10%, give or take. And we're starting to see a little bit of a bounce. Now, is this the low? Well, let's wait and see. So, last week, we were talking about some key levels to the downside. So, first and foremost, we were talking around 38k, 37 to 38k being the first one. Now, once again, this volume profile is from November 2022's lows, which is the 15k low, the overall low so far, up to the current high. So this is a trend-based volume profile, and this is something that I like to work with. And this is what I teach the members in the group. And the reason why we're looking at this is because we're looking where the significant volume is. So as we said last week, significant volume around 37 to 38k. So we have come down close to it, but we've slightly front run it. So first and foremost, if once again, I'm not going to sit here and laugh and tell you I know exactly what's going to happen, because nobody does. However, if this local downtrend is to continue, then first and foremost, I will be looking at this 37 to 38k. Exactly the same as last week, no difference. If price comes down into this, takes out the current lows, bit of a swing failure pattern, and then starts to show some strength and gives me one of my 3 entry criteria, then yes, I will be looking for longs. If this doesn't hold and price just continues to bleed down, once again, make reference to this, where we could see a bit of a cascade effect if we start losing this 37k level, 36, 37k level here, and we can start to see potentially a bit of a cascade effect through all this, because all these stop losses are tightly packed together, which means enough force to break through one of them can trigger the rest. Bit of a cascade waterfall. We've seen it time and time again, especially in crypto. If we do come lower, then the next high volume node that we'll be looking at is around 34k. So this for me, once again, is a bit of a zone. You got roughly 33 to 34k. This will be the next sticky zone. Now this, to me, this is a crucial sticky zone, because if this doesn't hold, then we're looking back down towards 31, 32k. And if we start getting acceptance below there, then it's not going to look very pretty, especially if you are a bit of a FOMO bull and you bought up here. So if we start coming down here, and once again, we start to see that local sign of strength. Now, what's a local sign of strength? Well, once again, I've said this many, many times on the channel. Either we want to see people heavily shorting this, trend traders getting so much FOMO because they've seen such downwards price action that they think, wow, now's the perfect time to short. And then price doesn't move. So we've got loads of shorters coming in, loads of bears coming in, short in the bottom, and price doesn't drop lower, and we start to see some absorption, which means limit orders, limit longs are sat here absorbing all these buy orders and holding price up. Then we can start to look for higher prices. Outside of that, what we can look for is just quite simply a change of market structure. If we start to get that, then yeah, we've got a long trigger. If we don't get that, then realistically, once again, we're looking back down towards 32k-ish. Now, why is that significant? Well, every man and his dog is looking at this level. And why they're looking at this level? Well, quite simply, because they're looking at this as, where's my pencil? There. Resistance, breakthrough, backtest it as support. So this is what a lot of people are going to be looking for, which means this trade here is likely going to be quite crowded. So I want to see this in real time. Once again, it's not something I'm going to set limit orders down here and hope that I'm going to catch a stink bid, because that's not how I trade. What I want to see, once again, like I've said at these 2 other levels, if price comes down here, then starts to show me some strength, then yeah, I'll get involved with the long. If that doesn't happen and we start to get acceptance back into this value area between these dotted lines, then realistically, we start looking back down towards the point of control, which would be roughly around 28k, give or take. So that's the levels to the downside locally. Now, what about to the upside? What if this is the low? Once again, who knows? It could be. So let's zoom in. Let's get rid of this volume profile, and let's bring on the yearly open, which is a key level that you need to have on your chart, and also a volume profile from the absolute highs to the current lows. So now what we can see here, if if the low is in here and we start to grind up. And we can flip this yearly open and this point of control here. And once again, it's a big point of control. A lot of volume in this area. A lot of volume in this area. If we can flip this yearly open and this point of control, then we can start talking about higher prices. But this is the major zone that we need to flip first. If we can flip this, the next sticky zone is going to be around this value area high region, which is roughly around 43 to 44k. Now, assuming that we can flip this, then likely it is we travel through this zone very fast. Now, why do I say that? Well, it's because it's a very inefficient move. If you look at the volume profile, you can see where the spikes of the volume are just by looking at it nice and simply. And what you can see in this inefficient move is there's no volume here because price traveled through this so quickly. So it's what we call an inefficient move. So if price gets above 43, 44k, then likely it is we can travel back through this fast, and then we can start looking back up towards 46k. Now, do we get a rejection at 46k and then start heading lower? We could do. So there's a hedge position that I'll be looking at. If that doesn't happen and we start to flip 46k into support, once again similar to this, so if we just continue grinding up and we flip 46k into support, then realistically we can start looking at targeting the overall highs. At the overall highs, very simple. Do we take out the highs roughly around that 50k sort of region? Little swing failure pattern. Then there's another hedge position to be had there. Take out all the stops. Anyone that managed to short this, again, this was a very obvious high coming into that macro golden pocket. Very obvious high, so therefore there's going to be a lot of stop losses up here. So grab the liquidity and then move on. The market is always seeking liquidity. It's not necessarily coming for your stop losses. It's not looking at you as an individual by the big scary market makers that some people make out. But you got to think, a lot of people will have shorted this level. So there's going to be a lot of stop losses above this level. Anyone that shorted lower down, likely using this pivot to put the stop loss. So therefore, there's liquidity above here. So if we get something like this, then great. We've got potentially a hedge play. If we don't get this and it just continues up, then we have to zoom out once again. And we can start looking at the next major levels above. So let's just clear up some of this. I'll take off that fixed range and we'll do what we did last week. Fixed range of the whole top range. Then we're also going to do Fibonacci from the highs to the lows. There we go. Now, obviously, we can see here, this is what we've talked about before. We came into the golden pocket, had a lovely rejection. Very simple. Nothing overly technical about that. Now, if we don't get a swing failure pattern, roughly up into this 50k, and we can see here the 0.65, top of that golden pocket. If we continue higher than this, without a swing failure pattern, then we can start looking up towards value area high, which is coming in roughly around 53k. If we can clear value area high, then we can start looking up towards 57, 58k, the last major sticky zone. Now, assuming that we don't get a rejection there and we can flip that, then we can start looking at targeting the all-time highs at 69k. But only then. If we cannot flip 57, 58k, then it's pointless talking about all-time highs because we've just got resistance. Okay, until we can flip this level, all-time high isn't on the cards. Okay, and that's it in a nutshell. Very simple. It's just level to level. Obviously, if you are a day trader, the levels we've discussed today are very important. If you're a hodler, then you understand why we're rejected here and what criteria we need to see if you're going to see those all-time highs. Okay, if we start losing 33, 34k, then realistically it's not going to look very healthy, and we're going to start looking back down towards 32k, potentially even down to 25k. But again, we play it level to level. Hopefully you guys have learned something today. If you have, hit that like button. If you're not subscribed, consider subscribing. And until next time, gang, as you were. Bye-bye.